Hi, my name is Rick Lear, the founder and chief investment officer of Lear Investment Management. Today is April 15th, 2020. It is 87 days since the first case of COVID-19 was found in the United States of America, and there are 2 weeks left in April, which seems to be a long month. However, today there is light at the end of the long, dark tunnel as cases of COVID-19 have started to flatten in our country. And now the rhetoric turns to two things. One, when will we reopen the economy? And two, has the damage done in this self-forced downturn in the economy, has that damage lasted longer than we initially thought? So for that, today in this video, we look at our proprietary research on the data. As you know, for the last 5 years at Lear Investment Management, research is our calling card, it's our foundation. So thus, we conduct our own research. So now I turn to Director of Research, Jim Warner, for a video presenting our data on COVID-19.
Thank you, Rick. For the last few months, we've conducted extensive daily analysis of the coronavirus outbreak and the associated healthcare crisis, as well as the stream of epidemiological findings. We did this for two reasons: to prevent from being misled by fake news and to come to our own conclusion on when the global economy will restart. In Europe, we are starting to see green shoots, as new cases of the virus are declining in nearly all EU countries, as represented by the orange bars. Europe is beginning to make plans to get back to work, and in some countries like the Czech Republic and even Italy, non-essential businesses are reopening. Important to our work was our early hypothesis that who gets the virus is more important than how many. Our early work on Chinese epidemiological data led us to look closely at the age of the patient and the impact of pre-existing conditions. Over time, our hypothesis has proven out that older patients with pre-existing conditions were most at risk of hospitalization and ultimately death. New data from Italy has put an even finer point on our thesis. With a median mortality age of 80, 61% of patient deaths had 3 or more pre-existing conditions. In other words, the majority of deaths occurred in already very sick elderly patients. In the US, we have seen similar trends pointing to a very specific demographic with heightened risk, as 89% of all patients hospitalized had at least one pre-existing condition. As New York City turns the corner and new cases continue to decline, in addition to this being a wonderful sign and a boost to US markets, we have observed additional information confirming the low mortality rates of patients under 65 years old and the persistence of pre-existing conditions in those who succumbed to the disease. Looking more broadly at the entire US, we see new cases peaking, and as reflected in the blue bars in the graph, and the curve is flattening. Given the early adoptions of shelter in place in highly populated states like California and Texas, the virus has been contained. The orange bars reflect when symptoms of the positive cases were first noticed. As you can see, symptom onset precedes confirmation of the virus and provides a leading indicator of the outbreak. As you can see, illness onset has plateaued and may even be on the decline. In summary, the virus outbreaks appear to be contained in both the US and the EU. We know who is at risk, who is most at risk of hospitalization or worse. We also know better therapies will be available soon, with a vaccine perhaps 12 months away. This data and other strategies can now be considered for removing shelter in place and gradually restarting the global economy in the coming weeks. We do expect certain states or regions of the US to restart at different speeds and some level of social distancing to exist for several more months, but nonetheless, there is light at the end of the tunnel.
Thanks, Jim. So now what you'll see is that we have a framework, a research process to build upon to determine when the economy may be safe to open, which parts of the economy, who will be able to go back to work. And now the work goes to understanding the damage and which companies will be able to thrive through this crisis and into our new world. Today, as mentioned before, we remain cautiously optimistic. The sharp run up in stocks is a little concerning, and we do expect the market to go down some from here. Thus, we remain balanced with stocks in solid companies with strong balance sheets that we believe have secular tailwinds to drive us through this recession. Balanced on the other end with gold miners, fixed income, and cash. So, in the end, we wish the best to you and your families. We thank you for listening, and we will report back after earnings season on the extent of the damage of this economy on the actual earnings of companies. So take care, be safe.